as Samantha highlighted earlier, up and down day, but particularly down, and particularly for the resources stocks.
Yeah, this is one of the bigger down days that we've seen in the last couple of weeks. Markets have ground higher rather on retail stocks and financial stocks, but underneath that, resources have been under pressure. But specifically today, you really saw that coming through on Exxaro and Kumba and Billiton and Anglos. And look, a lot of it is based on the iron ore price. Coal price has also come off a hell of a lot as well as general fears of a slowdown in China and general world fears of a slowdown in world economic growth. No news from Ben Bernanke just yet. The world on tenterhooks on that. So it's a perfect storm. It's all happening at once. So we've generally seen a sell-off at the moment, a flight to safety. Resource stocks are still considered high risk at the moment. But yeah, it hasn't been a nice day if you're in resources.
It certainly hasn't been a nice day. And everyone who comes onto the desk says perfect opportunity to buy resources, but they continue to fall and continue to fall when we have, slight negative sentiment filtering into the market around global growth and everything. Where do you stand on the fence?
Well, the question is, where's the bottom? I think that's what everybody wants to know. And at the moment, you can argue it's a bit of a falling knife. I definitely fall into the group of people that have a consensus that it is a very good opportunity to consider resources and adding them to your portfolio. I think if you're in resources, it's too late to get out now. You will be getting out very close to the bottom, in my opinion. Okay. If you have no resources on your portfolio whatsoever, it's probably not a bad idea to start accumulating them at these levels. The reason why I say that, if we have a look at the valuations, all right, they are incredibly low. They could still get a little bit lower, but generally speaking, if we look at the metrics of things, it is unforeseeable, in our opinion, that China is completely going to collapse. All right, this is the country with the world's biggest consumption of raw materials. They are slowing down, but it's not an utter collapse. I think what we're seeing valuations that are indicating a potential collapse in China at the moment. So I think it's overdone to the downside. It can still get worse. That's how markets are. But in the long term, which is the way you should look at it, I think now is a very good opportunity to start accumulating, even if the prices are coming off a little bit.
Nicholas, shifting sectors completely.
Yes.
You heard the interview now with Selman Kahanovitz from Lita Healthcare. It's one of those small cap players, which I'm sure many consider a star. How do you feel about it?
Well, to be truly honest, Lita is not a company that we look at. However, we do know of it. I mean, it came out of the Myriad Medical, and it's done very, very well, actually. In fact, anything connected to pharmaceuticals in the last couple of years has just done tremendously well. I mean, if you had bought Life Healthcare, Mediclinic, Netcare, Aspen, Lita Healthcare, you've done pretty well. For many reasons, they're all pretty good businesses, they're well run, but they're in the defensive part of the stock exchange, and that's where the money is really being flowing into. So, having a look at Lita, you can't really go on the numbers. There've been a lot of deals that have marred those numbers at the moment. So you need to look at the deals, and you need to understand, are they good, are they bad, will they be bedded down? Certainly having a look through it, it looks very interesting. It looks like there's a lot of potential for growth. If management will pull it off, great. I think there's still good prospects. But right now, having a look at valuations, I do think in general they are overextended. Share price is trading at about 3 times its net asset value, and in my opinion, the PE ratio is a little bit high. So it's a great business. If you've got it, hold it. But if you're thinking of buying, I think it's a tad expensive at the moment.
Well, related to that, if I could ask you about Aspen coming out with its trading statement.
Very good, very nice.
Full year headline earnings per share, 21 to 27% higher. The market didn't like it. I see on the board, Aspen down 2.6% on the day. Wanting more?
Well, I think the market needs to understand that the numbers are what happened in the last 6 months. I think looking forward, you need to understand they've done 2 deals with GSK, GlaxoSmithKline. In Australia, I think that's going to be great growth going forward for the business. The thing with Aspen is they're in a big growth phase at the moment. If you believe in that and you believe that they will be successful, then the sky's the limit. If you don't believe that's going to happen, then the share price is looking a little bit peaky. I'd say, again, if you've got it in your portfolio, hang on to it. It's a good place to be. If you're thinking of buying stock from scratch, rather wait for a move below 140 Rand. I think it looks a little bit cheaper there.
Let's shift focus once again.
Again, all right.
Right, let's move on to the banking space. We've had First Rand CEO tweeting today saying that he's concerned around the growth in unsecured lending. Of course, we've had commentary from, FNB's been playing in this space. We've had commentary from Treasury in it. We've had Capitec's trading update, which disappointed a slowdown in earnings. How are you weighing up all these comments right now and viewing the risk in the
it's
space?
A very good point. A lot of people have been talking about this bubble in micro lending, and it's going to explode, and being in Capitec and African Bank and all these other guys is a dangerous place to be. I don't see that. Please show me the data that says that there's a bubble in unsecured lending. And it's grown very quickly, but it doesn't mean that there's a bubble. Now, the CEO of FirstRand might have a good point. We need to understand that the major banks in South Africa, it's not a conspiracy theory, it's my point of view and statistically correct. They've been chasing unsecured lending. It's the quickest and easiest way for them to grow, and it's the highest margin business that they can get their hands on. Able and Capitec have been doing this for years. These guys are still pretty new at it. So generally speaking, you can argue that they don't have the similar systems in place that Capitec and Able have that can screen these individuals, and technically they're taking on higher risk at the moment. There's good fact for that. So generally they are a bit concerned, but they're forced to do it because they need to make money. Capitec and Able have been in the business for many, many years. They know what's going on. They know where they're going to go to. And frankly, yes, a slight slowdown in growth, but if they're still doing a 20 to 30% increase in earnings, that's exceptional.
But what about, the retailers like JD Group, Truworths and the likes, who've also been looking to play in this space and earn margins, of course, credit retailers?
Absolutely. The point I'm getting to is that we've only hit the iceberg. I mean, it's just the tip. There's still so much more out there. There are many, many more consumers. I mean, that's why we've seen retail prices go absolutely through the roof. I know credit growth was slightly down and retail sales were slightly up. But
are you worried about their exposure? If you're talking about retailers.
As long as they've got good systems in place, absolutely. It's always been a risk. But if you have a look at their numbers and you speak to the CEOs, they've actually got that all under control. In fact, Truworths, interesting enough, has probably got some of the best systems in place for that at the moment. So I don't see it, in my humble opinion, as a major risk. But time will tell, obviously. I think it's a good space to be in. We've seen weakness in a lot of these shares, and I still think there's fantastic growth opportunity. And again, a lot of the weakness is based on the uncertainty in the world markets at the moment. So anything with an inherent small amount of risk is going to be sold off regardless. If you can look through that and you can have a look at the longer term story on these shares and understand that, then you're actually getting great opportunities at the moment.
On that point, thinking long term, looking for growth opportunities, do you use the Africa story as a selection criterion in stock picking? I think as an example for today, Nampak gave a results presentation talking about its ambitions in Africa, wanting to go bigger there. Metrofile, a much smaller company, filings solutions, storage solutions, full year results up 20%, also pursuing the Africa growth story. Is this important to you, or does one need to be careful?
Look,
here?
I think it's a very good topic to bring up. I mean, you're going to see more and more of it. I mean, going to be speaking about it in a few more years' time going on. It's a natural progression, I would say. South Africa is just one little part of Africa, and companies have found that they've probably reached their limits here. I mean, there's only so much that Metrofile can do. There will be growth in South Africa, but they're looking across the borders to see what's happening out there. But what's very, very important is it's not very easy to do business in Africa. It's a completely different environment, and I think South African companies need to be careful and cautious on their move there. I mean, there's very little infrastructure. It's a completely different culture.
And there's also, I mean, if you're talking about Sab Miller, they, just opening up breweries now in Nigeria. This is a market that is dominated by two key players there, and they have absolutely no presence at this point in time, or very, very little, or limited market share. It's going to take a lot to tap into that market.
True. The difference with SAB Miller is they've been doing it for a lot longer. They've been in Africa. They know the environment a little bit better. I mean, if Metrofile's just getting used to getting out there, or if Nampak and even Mr. Price, he sorted City Lodge the other day. They went with partners. They joined up just to make sure that they could understand this, the industry a little bit better. I think companies like SAB have been there for a long time. A lot of the mining companies have been up there. But it's interesting to see everybody else is following suit. You've got it with the fast food industry as well. So it's an interesting growth potential project, but it doesn't mean it's going to happen and it's going to be successful. So just be a little bit careful of that. I think it's a space to watch at the moment.
Thanks, Nicholas.
Pleasure.
That was Nicholas Sorour, Portfolio Manager at Sasfin Securities.